No banks, no fees, no inflation. These are the potential perks of this thing called Bitcoin.
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 Bitcoins.
Bitcoin.
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 We believe that the institutional behavior and moves recently have been fascinating. We have been expecting institutions to start moving into Bitcoin and other crypto assets, but primarily Bitcoin, the most secure of the blockchains. Because if you look at the correlation of Bitcoin's performance relative to any other asset class, it has the lowest correlation, meaning if you buy some Bitcoin, you will further diversify your portfolio and increase your returns with lower risk, right? So that's why institutions look for that low correlation. Bitcoin has it. And so that's clear. We have 10 years of history now. But what surprised me and us generally was to watch MicroStrategy, which has put all the cash on its balance sheet into Bitcoin, and even did another equity offering so it could put more cash on its balance sheet. And I think that's a little crazy, because I think the regulators will have something to say about this in terms of what is this? Is this company the MicroStrategy technology company, or is it like an ETF? So we don't know about that. But then you saw Square put 1% of all of its assets in Bitcoin. And I think you're going to see more of that. We didn't expect that. What we did expect was, because of the low correlation of returns, institutional investors to move in. We do believe that Bitcoin is getting ready for institutional. We have a very disciplined process. And so our minimum hurdle rate of return for a stock to enter the portfolio is 15% at a compound annual rate over 5 years. We expect the stocks in our portfolio to double over the next 5 years. Now, when you have big runs, as we did last year, a lot of stocks drop below that 15% as a 5-year expectation. And so when they drop into the 10 to 15%, we'll be taking profits. So we are selling, if they're core to our platforms, then we will probably sell, if we think it's gotten way out of hand, we'll sell it down to 50 basis points. We've gone from 10% to 50 basis points in stocks, and exiting some as well. Even if they are core, we just think, okay, they're going to need a long time to grow into this valuation, and we don't want to live with or sit with dead money. Then we will get corrections like the coronavirus, right? And what we do during a correction, we will have sold stocks that are core. For example, 2U and Teladoc are they were in both our next generation internet portfolio and our flagship before the coronavirus. Both of them benefited from stay at home. They started moving up as other of our stocks were crashing. They moved up to such a point, they dropped below the 15%, as these others were giving us opportunities to deliver 50% plus at a compound annual rate. That's at the beginning of last year. At the beginning of last year, that number, that 5-year number, was 42%. Today, it's closer to 20%. But stock by stock, we're looking at that 15%, and the more it falls below, the more profits we will take. So we have such a creative research team, however, and there are so many stocks vying for our attention, and with these IPOs, vying for a position in our portfolios, that when a stock drops below 15%, we know there's something else waiting, knocking at our door, waiting to get in.
What's your kind of vision going out 5 years and 10 years for Bitcoin as an asset class and a value?
We don't have to go out 5 or 10 years, it's here. We wrote a white paper in 2016 called Bitcoin Ringing the Bell for a New Asset Class. And so, yes, we believe it's here. We believe that Bitcoin is the reserve currency of the crypto asset ecosystem. We also believe there will be very few huge winners in the crypto space. We think the cryptocurrencies are going to be the huge winners. So this is really flipping the internet on its head in terms of how it evolved. And the internet evolved without a payments infrastructure. And the reason for that is nobody thought commerce would evolve on it. This was for intelligence and academia, and consumers in the United States weren't even allowed to use the internet legally until 1991, Telecommunications Act. So we believe that Bitcoin is, and crypto world, the value accrual, where we will see most of the value accrue is to the cryptocurrencies themselves. This is not what happened in the internet. In the internet, the protocols, so Bitcoin's blockchain is one protocol, Ethereum another. The protocols basically just became standards, right? Technology standards upon which these very valuable applications were built, Facebook, Amazon, and so forth. The value accrued to the applications. This time, we think the value will accrue to the protocols themselves and the currencies as measured by their currencies. We believe that Bitcoin is already the reserve currency of the crypto asset ecosystem. And we can see that in that many crypto assets, most I would say, are priced in terms of Bitcoin. So that's the unit of account. The currencies are very important. We think there will be maybe 4 or 5 that are going to accrue the most value. Now, DeFi, watching it evolve, I mean, we're in the Wild West, decentralized finance. It's very exciting. So that's probably why Ether is going to be another one. We do have a fund right now only with 2 currencies in it. This is a private fund, and that's Bitcoin and Ether. We see Square and Tesla and MicroStrategy. They have diversified some. In the case of Square and Tesla, it's 5% and 8% respectively. MicroStrategy, it's 100% of their cash in Bitcoin. So if you were to expect 1%, if corporations did that, I think this is just a US calculation too, that would be a 40,000 increase in Bitcoin. If it's 10%, closer to where Tesla is, that would be a $400,000 increase in the price.